Namaskar and welcome to viewers from across the country for yet another session from Samvad, here at Mayur Bhavan in New Delhi. As a part of Azadi Ka Amrit Mahotsav, the Income Tax Department had launched Samvad in 2021. We have had several sessions on e-filing, Budget 2022 and TDS compliances, amongst others, which are available on our YouTube channel, Income Tax India. Today, we are going to discuss one of the most important reform measures introduced through Budget 2022, and that is updated return. The Income Tax Department in the recent years has taken several steps to ease taxpayer compliance. The introduction of updated return is another measure in the same direction. To discuss the concept with us in detail, we have with us Shri Kamlesh Chandra Varshne, an officer of the 1990 batch of the Indian Revenue Service. An MBA and a law graduate, he also worked for 5 years with the tax administration of Papua New Guinea. With expertise in tax policy and international taxation, he was the first commissioner of Advanced Pricing Agreement in India and played a crucial role in the rollout of the APA regime. He is presently Joint Secretary in the Tax Policy and Legislation Division, TPL for short, of the Central Board of Direct Taxes. The TPL division is the nodal office in the CBDT for the formulation of direct tax policy in the country. Sitting at this crucial position gives you an unhindered perspective on the philosophy and the finer workings of the reform measures that are introduced year after year. Thank you for being a part of Samvad today.
Thank you. Thank you so much.
Sir, first off, what is the philosophy or what was the reason for the introduction of this of the new provision of updated return in Budget 2022?
Right. So, whenever legislature legislate a particular piece of legislation, now it is a duty of administrator to ensure that that law is complied voluntarily by citizens of India. So, same is the position with respect to taxation laws. So when Parliament legislate taxation law like Income Tax Act, it is a duty of CBDT, Department of Revenue, to ensure that taxpayer comply with it voluntarily. So that's the key statement which is in mind of every administrator, that how do we facilitate taxpayer to comply with various provisions of the Income Tax Act voluntarily, so that because department does not have resources to go after each and individual taxpayer. If most of the taxpayers are fulfilling their obligation voluntarily, then only few will be left who need to be monitored and investigated. So that is the philosophy. So through updated return, the idea is to facilitate voluntary tax compliance.
Yes, thank you, sir. Sir, since you've said that voluntary compliance is one of the core objectives, and as you rightly said, voluntary compliance has been one of the core ideals of the Income Tax Department right since inception. So, can you explain to our viewers how the concept of updated return actually drives this idea of voluntary compliance forward?
Right. So, this is what we have been doing in past few years. Government has been proactive in taking steps to build trust between taxpayer and tax department. So if we go back few years back, what used to happen is that we, in the tax department, we receive information from various sources. And when we receive information about various taxpayers, we used to compare that information with the tax return that the taxpayer has filed. And then if we feel that they are not matching, we used to issue reopening notices, notice for reopening of assessment under Section 148. So that was the step we used to follow at that point of time. And taxpayer, when he used to respond to notice of reopening, didn't used to know what is the reason, why has that notice been issued. Only after he used to file his tax return, then we used to communicate the reason to the taxpayer. So till that time, we used to keep it as a secret. Now that has changed for last 2-3 years. Now, whatever information we get from various sources, from reporting entities, we confront to the taxpayer immediately, and we confront in the sense of if you have to file your tax return, all you have to do is you have to go to the e-filing account, and in the e-filing account under services, you will have AIS, Annual Information Statement. When you click on that, it will take you to a separate page, and there you can download AIS pertaining to you, and that will have all the information about income on which tax has been deducted, information about income on which tax has not been deducted, but that has been reported by the reporting entities. For example, your FD interest, your saving bank interest, your dividend, your purchase of shares, sale of shares. So all that information you will find at one place. Now, what used to happen earlier, that most of the people didn't used to disclose saving bank interest in their income tax return, and that in some cases also used to be by way of oversight, because saving bank interest is not subjected to withholding tax. No tax is deducted on saving bank interest. So you don't get a TDS statement for saving bank interest, and it is not possible for everyone to go to the bank and obtain that saving bank statement and all that. So what was happening was that certain some people were not disclosing saving bank interest. Now that amount may be small with respect to one taxpayer, but when you have multiple taxpayers and you combine that, from tax department perspective, it was a big amount. But how do we ensure that tax gets paid on that amount? It is not possible for tax department. They don't have that kind of resources to go after each and every small taxpayers just for not disclosing saving bank account interest in the tax return. So now this trust which has been created, that we will inform you what is your saving bank account interest, so that when you file your tax return, you include that income in your tax return. So this is the positive nudge that is being given by the tax department to ensure that most of the taxpayers file their tax return correctly, voluntarily, and disclosing all their income without tax department having to do any verification about their income details. So this is what has happened in last 2-3 years. Now we are taking it one step further, and that further one step is that certain information is disclosed to the taxpayer through annual information statement at the time of filing of tax return, but some information which comes to us later on is also equally relevant. For example, how much money you have spent on your foreign travel, how much money you have spent for purchasing a particular property, how much money you have spent for buying a particular goods, or spending on some special functions. All those information we get later on after you have already filed your tax return. Now, what do we do? Do we again go through that process of issuing 148 notice and reopening your assessment? Or we do a kind of verification in between. So now this is what is being planned, is that before we go to that stage where we issue reassessment notice, we are going to confront you with the information and we will seek your explanation, whether that is already reflected in your tax return, whether the kind of investment you have made, kind of expenditure you have made is all in line with the income that you have disclosed in your tax return. So when you get that opportunity to explain, the department also gets satisfied, and department can drop the proceeding. But there may also be some cases where you have actually omitted a particular income. There could be genuine omission or oversight. So updated return is an opportunity which is given to you at that point of time. The time for filing return has gone, but now we are doing an inquiry with you. We told you that this is the information we have collected about you, and if you feel that this information is not reflected in your tax return, you can file updated return. So that means, once again, we don't go to that step of issuing 148 notice, reopening notices. Just by giving you an opportunity to update your return, we have ensured tax compliance voluntarily.
Thank you, sir. Sir, like in your in this answer, you had referred to this new thing of verification of information post filing a return. So, is there any scheme in this respect? Can you please explain to our viewers a bit more in detail about this particular aspect?
Yes, Subhash. CBDT has already notified e-verification scheme under Section 135A of the Income Tax Act. This is going to be operational very soon. As I explained earlier, department obtains information from various reporting entities. It's a voluminous information. Now that information will be run through a risk management program, and from that more risk oriented information would be selected and then confronted to the taxpayer. Confronted in the sense that we will just inform you that we have got this information about your investment or your expenditure. Can you please explain whether this is reflected in your tax return? And then you can come forward. You will get a chance. You will get time to explain. You can produce necessary evidence to explain how it is reflected in your tax return, and no action should be taken against you. So you can satisfy the tax officer, and tax officer will drop the proceeding. All this will happen electronically. You don't have to visit tax office. This is e-verification scheme. So all this is happening electronically. Sitting at your home, sitting at your office, you can reply and explain to us how this is your there is nothing wrong in your tax return and everything is accounted for. No order is required to be passed in this case because it is not assessment notice or it is not a reopening notice. It is only a notice for verification. Once that is verified, further steps will not be taken by the income tax department. Or in case you feel that probably you missed out on this information, you can update your tax return and pay tax, and matter will end there. But in some cases where we do not get any response or where the response is not satisfactory, then we go to the next stage. And we are expecting that those cases falling under the next stage would be very, very minimal.
Thank you, sir.
So now there's a doubt that our taxpayers usually raise, that this concept of updated return, can someone who has not filed a return within the due date, can they obtain the benefit of filing an updated return?
Yes, that's right. I mean, impression may have been created by my answer that you have filed your return, you update your return. So that is always there. You have filed your return, you update your return. But even if you have not filed your return, you can file your first return as an updated return. So updated return facility is open to all the taxpayers, whether they have filed original return or not.
Thank you, sir. Sir, is there a time limit that has been provided for in the Act and the rules for the filing of an updated return?
Yes, updated return, there is a time limit that is 2 years from the end of the assessment year. You can file updated return up till 2 years from the end of the assessment year, and I will explain the actual numbers. Let's say financial year 2021 is your accounting year. And in income tax, as you all know, we call it assessment year 21-22. Financial year 2021 income is called assessment year 21-22 income. So assessment year 21-22 return, you can update by 31st March 2024, 2 years. 2 years from the end of the assessment year. So this is how it works. So normally what happens is that this assessment year 2021-22 return, revised return or belated return, can be filed till December 21. But in last year, because of COVID, this was extended to 31st March 2022. But now because of updated return, you can update your return till 31st March 2024.
Sir, thank you. Sir, is there any rationale why why the time limit of 2 years has been specified for the updated return?
Yes, the reason behind giving 2 years is, as I said earlier, that there will be some cases, not many, but some cases where we need to take further action because we are not satisfied with your answer or you have not furnished any answer. In that case, we go to the next stage, and that next stage is issuing of notice under 148, which we call reassessment notices. Now, for that, normal time limit under section 148 is 3 years from the end of the assessment year. In some cases, you can go beyond 3 years, but the normal time limit is 3 years from the end of the assessment years. So idea is that whatever we want to do through e-verification scheme, we do within 2 years from the end of the assessment year. and give you an opportunity to update your return within 2 years from the end of the assessment year. If we go to the next stage in few cases, then we have 1 year with us to consider whether we want to issue notice under section 148.
Right, sir. Sir, now let us take the case of a taxpayer who has filed his return, paid his taxes on time, but has realized the need to file an updated return. So, does this taxpayer have to pay any additional charges while filing his updated return?
Yes, the law provides. First thing is, very clear that when you pay additional tax, there is an interest for delayed payment of tax. So that interest would be there. There would be tax on that additional income which you are showing in updated return. So that tax and interest would be there. And in case you have not filed the return earlier, it is a first time return, then there will be interest for late filing of return also. But if you have already filed a return earlier, then that interest will not be there. So this tax and interest which you have to pay, and then you have to pay extra 25% or 50%. 25% if you are updating your return and paying extra tax and interest in the first year, and 50% if it is in the second year.
Sir, so is there any rationale in collecting the extra charges? Because it is expected that the taxpayer, when he is updating his return, would anyway be paying the incremental tax and interest on that. So, could you explain to our viewers the rationale behind collecting additional charges on this?
Yeah, see, incremental tax, you correctly pointed out that taxpayer is already paying incremental tax and interest. In addition, he is paying 25% or 50% depending on the timing of updated return. Now, why do we have this extra tax? This is required because if we don't have that extra tax, what message we are giving? See, the purpose of updated return is to promote voluntary compliance. Now, if we don't charge that extra tax, then what is that there to reward a taxpayer to make sure that at the first stage itself, when he has to file his tax return within due date, he files it correctly. See, ultimately our aim is that initially when taxpayer is filing his return within the time allowed by the law, he files it correctly. And that should be encouraged. We should not do anything where there is a hindrance in that process, where there is a message that you don't have to be careful at the time of filing your return. You can wait for notice from e-verification team, and then you can pay you can update your return and pay that tax without any incremental tax. That message should not be given, because if that message is given, that will reduce voluntary compliance at the first stage and will also be discriminatory against taxpayer who always file their tax return properly at the first stage itself. This updated return is for some kind of mistake which taxpayer can make at the time of filing of return, for some omissions, and therefore for that purpose there is some extra tax so that it does not become a habit. While we are the government or the legislature has given you an opportunity to update your return, they also don't want that it should become a habit.
Aspect of updated return, in terms of eligibility of an updated return, are all kinds of taxpayers eligible to file an updated return, or is there some kind of a negative list wherein taxpayers are not allowed to file an updated return?
Right. See, as we explained earlier, that an updated return is that there could be a mistake, there could be omission. So we give you an opportunity to update your return. So legislature, while deciding that we need to give an opportunity for you to update your return, also have to be mindful that it is not misused. For example, there may be tax evasion cases, we have obtained information under the tax treaty, we have information under Benami Act, we have information under Black Money Act, we have information under PMLA. Now, these kind of information we have, and we have communicated to the taxpayer, and if we allow taxpayer to update his return, then it will defeat the purpose for which those laws are there in place to check tax evasion. Similarly, if prosecution notice has been issued to you, if search and survey has been conducted in your case, then you are not eligible to file updated return. And then other than tax evasion cases, we also have that updated return cannot be a loss return. If you have filed updated return once, Now that again you cannot file updated return for that year. For 1 year you can file updated return only once, and you cannot file updated return to reduce your income, increase your refund. So these are the broadly negative cases which are not allowed for updated return for obvious reason that there shouldn't be a misuse. They shouldn't affect our tax detection program.
Sir, just touching back on your this response, you had spoken about refund. Now, if there's a taxpayer who wishes to claim a refund or wishes to claim a higher amount of refund than what he had claimed in the original return, can he file an updated return in such a case?
Yes, so I explained earlier that you cannot file updated return to reduce your tax liability, increase your refund, or claim a fresh refund. But for that, we already have provision in the law. You can file an application for condonation of delay in claiming refund, and the relevant section is section 1192B. So you can file an application under section 1192B that is already there in the law. For that, updated return is not needed. There is sufficient provision in the Act that if at first stage you forgot to claim refund or you forgot to claim correct amount of refund, you can file that application.
He was filed an updated return wherein he has disclosed additional income increment and paid incremental tax. Would he be subjected to penalty and prosecution under the provision?
No, he will not be subjected to penalty and prosecution. So it is only that incremental tax he has to pay, that's all.
Okay, sir, thank you. So now coming to the actual process of filing an updated return, do we have a separate ITR form for updated return? Could you explain a bit about that to our viewers?
Yeah, so ITR-U has already been notified. It's a very simple form, very minimal information is required to be given. So it is very user friendly. So if you have to update your return, you have to file ITR-U, and that has already been notified and is in public domain. One can go through them, and if need be, one can update their tax return.
Sir, going a bit ahead now, let's say a taxpayer who has filed his return and then updated his return as well. Is there a possibility that this updated return would also be picked for scrutiny or picked for assessment further?
See, what we have a system in the income tax department, only 0.5 or around 0.5% cases are picked up for scrutiny. And this would also be form part of that basket. From there, 0.5% cases will be picked up for scrutiny. And that scrutiny selection happens on risk-based criteria, which is decided by a separate team and which is fed into the computer. It is all computer-assisted selection of cases for scrutiny, and these updated return will also be part of the basket from which computer will select cases for scrutiny. And if they are selected for scrutiny, then assessment will have to be completed within 9 months from the end of the financial year in which updated return was filed. So that is that law. It is already there in the law. But yes, if you ask the question whether they can be, yes. But as just like any other income tax return, only a few returns are selected for scrutiny. Right.
Sir, the next logical question is when suppose that a return has been filed, it has been updated, it has been picked up for scrutiny assessment, and then an upward adjustment or an addition was made in the course of the assessment proceedings. So would the taxpayer then be liable to pay the additional charge of 25% or 50% on that adjustment which was made in the process of scrutiny assessment? Would that additional charge be applicable on that income, sir?
No, incremental tax is only for the income that you are showing additionally in updated return. Once that updated return has been filed, most of the cases will not be picked for scrutiny. Some cases are picked for scrutiny, and if any addition is made, it will be just like addition made in a normal case. And this incremental tax will not apply. Normal tax, normal interest will apply. Penalty can also be initiated. So just like normal cases, when an addition is made, it is subjected to tax, interest, penalty and prosecution. This will also be subjected to same tax, interest, penalty, prosecution, but not the incremental tax which is specific to updated return.
Sir, if we consider a scenario wherein there's an employer and there are employees, an employer had failed to initially deduct TDS while paying salaries to the employees, but later he realizes that he has to deduct TDS. He pays the TDS which was due, and he issues a fresh Form 16 also. In such a scenario, do the employees need to file an updated return?
Yes, employee is still required to file updated return, and the reason is that TDS is a primary liability of the employer, but that does not exonerate the employee to show his income correctly in tax return. So even if there is a stream of income on which tax has not been deducted, not only in case of employer-employee, in any other case, all your business income and interest income, any other income, one taxpayer cannot say that because it was not subjected to TDS, so I did not disclose it in my tax return. That is not an acceptable excuse. Every income is to be disclosed in the income tax return, whether TDS was deducted or not deducted. So even if the employer has failed to deduct TDS, the employee was obligated to show it in his tax return. If by oversight he has not done it, then he must do it as an updated return.
Sir, sir, in Finance Act 2022, we brought in a new amendment which had a retrospective effect from assessment year 2005-2006. It essentially said that tax always meant to have included surcharge and cess, which effectively means that surcharge and cess, payment of surcharge and cess, could not be claimed as a deduction.
Yes.
So in earlier years, if there are SSEs or taxpayers who had claimed it as a surcharge and cess as a deduction, will they be eligible to file an updated return now?
See, first of all, yes, law does not prohibit them to file updated return, but we have come out with a separate mechanism for them. I will explain that mechanism, but first let me explain why this retrospective amendment was carried out. See, we have this cess which was first introduced in Finance Act number 2, 2004, and since then every Finance Act is imposing this cess. And Finance Act is saying very clearly that this cess is additional surcharge. And Supreme Court in the case of K. Srinivasan had said that additional surcharge levied under the Finance Act is tax. So that means there is a clear-cut Supreme Court decision that this cess cannot be allowed as deduction, but still some courts allowed it. However, ITAT Kolkata lately in one of the decisions, they relied on this Supreme Court decision, and that said that according to Supreme Court decision, this should not be allowed as deduction. And after that, we carried out the retrospective amendment. Now, we are aware that when that retrospective amendment is being carried out, then there would be taxpayers who have claimed it as a deduction. So, in a kind of a sense of giving them an opportunity to come out voluntarily on their own to pay tax and interest without incremental tax, which updated return would have involved, there is a mechanism, and that mechanism is rectification of income. New provisions were introduced in Finance Act 2022 under Section 155. According to that section, form is required, an application form is required to be notified, and a date window will be given when assessee can file that application form to the assessing officer. We are working on it. Very shortly, we will come out with that form. It will be electronic form, which is to be filed electronically, and we will give a window. Government will decide what window is to be given. So that window will be given. And within that window, if a taxpayer intimate to the assessing officer that these are the assessment year where he claimed these cess or surcharges as deduction, which should be rectified in his assessment, then then assessing officer will rectify that, and then taxpayer will pay the amount. If taxpayer pays the amount, then there will be no penalty, no incremental tax, nothing. Only that tax and interest would work out. So that facility will be provided, and we will inform taxpayers that once that facility is available.
So that was a short and informative session on the concept of updated return. I'm sure you will benefit by this session and by the new reform measure of the Income Tax Department. Please do share this video to those who you think might need it. Do also follow us on our social media handles on YouTube Facebook, LinkedIn, Twitter, and Instagram. Until the next time from Samvad, thank you. Jai Hind.